Welcome to TradeTheMBI.com. This is John. This report is for the 5th of October. And well, we made new lows, but as soon as the new lows were made, that caught enough activity. We still had the MBI magenta leading yellow here, and partial improvement from a DOC red, but still what I would consider very weak, which means you're just likely to test your breaks of lows, and that's kind of what we did. Still puts us under that bottom range here, but of course, as I was talking about, new fund money coming in, just in time to pretty much save the day, kind of your plunge protection team, so to speak. But you can see the huge drop off of short covering. So that's the MBI white there just completely collapsing. Didn't happen quite so much from a DOC standpoint. In fact, what you see from the DOC is the orange caught between cyan and red, which is sort of a continuation. So I would expect still to float around in this range until there's an improvement from DOC readings, where we get a turn up at, like I was talking about before, lower price, which would certainly be much more of an impetus for a push to the upside. Because again, everything always gets carried too far in one direction, and then there's a move unless there's some major catalyst like a complete economic breakdown. And of course, this is where everyone starts to look at jobs and economic growth situations. And it's interesting because, they did their study on CEOs who all believe a recession is coming, and then you have the Fed, which does not believe a recession is coming. So that really becomes problematic from a whose perception to believe. Now, short order, the Fed has been right for more often than not. In this particular case, do I think they're probably behind the curve on it? Yeah, because things can accelerate very quickly. And the current data that they look at, once things start, it's difficult to see how fast the snowball grows. And that's literally what you're talking about. From an NQ viewpoint, it was already stronger. So we'd already seen that there was much greater improvement from an NQ standpoint, but still similar within that. But you can see the DOC green to cyan ratio very close, just shakeout falling off. So again, holding within the ranges, but if it gets above the 23%, you could spark another little buy rally fire, simply because it's the right time of the month for that to happen with the new fund money. And of course, yields and treasuries still producing best return overall with zero risk, as long as you assume that the U.S. is going to pay, which nobody's discounting. Uh, Big improvement though, right here, the dip in oil. And this is where it becomes interesting, because at a certain point, does it become a supply issue, or does it become an issue of uh, stunted growth and people cutting back to the point where they're just not purchasing? And that's a relative one. Hard to imagine that's all going to happen within a day. We knew that, from a positive extreme standpoint, we had them from there, and then also the original going back to the breakout, which would still bring it back down to the 82 range. Still way too high. I don't see that as much of a relief. You've got to get below the 70 marker for things to be in a comfort zone and reduce it. So this is going to create some degree of spike, but if it fades back down, then a future spike, not so much. Well, in that case, then economy can continue to limp along. And from a Fed standpoint, that's ideal. And of course, as I always say, uh, the Fed wants to control things. They're just going to control the commodity price on that, and it's all that matters. That gave a little boost back to the euro. Not enough to do anything. The eurozone is going to suffer pretty dramatic effects from all this. Um, and interesting, the move from gold is very counter to what we've typically seen, and doesn't make a whole lot of sense, because we know inflation is going to be rising, and that um, the question is, you haven't seen economic turmoil yet. And so as long as that's the case, there's an argument to be made that you don't need to be in it just yet. And of course, when we look at the readings, there's nothing in there that would have suggested it, even from time back when we started to get the sell signals. As it was fading, you figured, okay, if there was a pop in inflation, but we've got MBI white pretty much leading all the way through on this. So it's quite an extended period of being held back. Despite the market move, not a whole lot from the crypto space as well, because again, the same things that apply to gold apply to them as well. Even ETH much weaker than Bitcoin. which is an interesting one that we've seen so much more activity from Bitcoin from a strength standpoint. So here's what it looks like. Basically, moved back down and basically came price being brought right back up to this break of the 0% from a couple of days ago. And kind of normal within a decline of 50% move back to the upside, and you see if there's enough new buyers in there to propel things, and if not, then it will fade back just as quick as it rose. What we look at from an intraday standpoint is it started early and there was a continued rise and faded back right at the open, and they were checking to see how much supply there was to the downside, not as much, and that caused rallies, fill backs in, and then just pump from there, and it hasn't let up. In fact, even here in post market, we've had mostly upper portion. We just were in this nice little down move, but popped right back up again. So that's the current state of things, and I can assure you that everyone's going to be looking at the data and seeing where things are as far as that goes, because that's really going to be the indicator of whether or not the Fed will change course. And at this particular stage, oil is not low enough for the Fed to change course, so nobody's going to be suspecting that that's the case. The question is whether the economy will continue, even with rates where they are, and if that is viable, then market will make the adjustments from there, and that would definitely be a net plus. So all things being equal, we just have to stay with the readings. Look for me on the Skype chat. Trade well. Have a good one.